gold at the top, value sell side. And I says the successful squeeze is when you see the buyers at lower prices getting trapped, not higher prices. That's when we get the squeeze on. Can you see where the squeeze is? Well, what happened to these buyers here? You see them? See how obvious that is? So when those buyers come in there at 10s and 11s, you're going to look at that and say, holy shit, this could open up door all the way through to the zeros here. And I should make some very, very easy cash on this squeeze. Easy cash on this. This is solid sell side value. Very weak buyers. The squeeze is on. The accumulation of the bigger position here is on. And all of a sudden, we've just taken another $1,000 off them. Another $1,000. It's on the chart. We told you what was going to happen if it showed up. Guess that. There you go. Getting in front of the narrative, right? So because we'd already told you what to be looking for, getting in front of the narrative, you were able to get in front of the narrative and say, holy schmoly, I kind of like what you're saying here. I kind of like your story here. Why don't I maybe join in with a bit of this action? Well, guess what? Well done. What a nice trade, eh? What a nice trade. What do you think of that trade, guys? Any good? So this was a story that I was building on this. You can see we've obviously got the pin zone from 12 o'clock right there. There's the pin zone. We've sold this price several times before the big spike that the Qatari news had. So we had the big spike on the Qatari news. But we've been selling consistently and profitably from this price. Remember, we talked about this arriving at a POC here and getting jammed up before the pop. And then all of a sudden, you can see we get 1, 2, 3 into a top edge. They were big buying, getting absorbed ultimately. And then we got the squeeze on, which is the highest probability trade in the world of trading right there. And from the squeeze, off she pops. And what an outcome, guys. Look at that outcome. 15s to 5s, target price must be 95s for a measure. So with a target price of 95 for a measure, 10-point target on the 15s to 5s, 5s to 95s, you've just given yourself a profit there of $2,000 a contract. And on the squeeze, a profit of $1,600 a contract. And guess what? We called it live in the room. We discussed it live in the room here. So that if you wanted to join us, you were able to join us if you wanted to. If you wanted to. Another massive winning profit for the room, guys. Another massive winning profit. Well done, anybody that trades gold. Now, Reeve made a comment a short while ago about deltas on the mini NASDAQ versus the micro NASDAQ. And the big question is why? I mean, obviously, making a comment, what you're going to try and do is establish, possibly a reason for it. And I don't know if Reeve has established a reason for it. I don't know if he's came up with a thought that might make sense in terms of why that might happen. Well, there's one massive reason why the micro might be a delta-driven trade, and that's just because, well, how many retail traders chase price? How many do you think in percentage terms? How many percentage of retail traders chase price? 95, 96, 97, 98% of retail traders chase price. So if retail traders chase price, it should be that the delta and price are always the same, really. Would you agree with that? Delta on the micro should be exactly the same as price, really. And obviously when you see the big boys absorbing that, you say, holy shit, the big boys are absorbing that retail delta. Something's interesting shaping up here, right?